Wishing a very good morning to all the participants of this webinar called the DTRTI Lucknow Webinar 2021 series. And today is 30th of October 2020. And in this webinar, we'll be discussing cash books as part of our bookkeeping and accountancy sessions. Friends, in this unit, you'll be studying how the cash book, though it is a type of a subsidiary book, but why it is treated as a principal book. This question must have come to your mind earlier also, that in spite of looking like being a type of a subsidiary book, in fact it is a type of a subsidiary book, why it is treated as a principal book. You will also become familiar with various kinds of cash books like a simple 2-column and 3-column cash books. You will also learn the technique of preparing a simple cash book and the technique of how to balance that cash book. You'll also see how a double column cash book is prepared by adding the discount column along with the cash column. You will also understand the techniques of preparing 3-columnar cash book. Besides, you will also understand what is a petty cash book and what is impressed system of petty cash. You will be noting the advantages that come by maintaining a petty cash book. You'll also learn how to maintain a petty cash book and how to post the entries of that petty cash book into the ledger. You will besides also understand the accounting of the debit and the credit sales transactions. Now, this is a diagrammatic representation of broadly the things that you'll be studying in this chapter. Cash book, a simple cash book, a 3-column cash book, 2-column cash book. Cash book being a subsidiary book as well as a principal book, both. Now, cash transactions, whenever we do cash transactions, we just straight away record them in the cash book. And when we record them in the cash book, thereafter we post them into the ledger. As you must have seen, whenever we make a credit purchase or a credit sale, that entry we make straight away in the purchase book or in the sale book if the transactions are more in number. Similarly, if there is a purchase return or a sales return, or there is a bill receivable or a bill payable, we make that entry in that respective subsidiary book known by the name of purchase return register or return outward register, or sale return register, which is the return inward register, and of course the bill receivable register or the bills register, you can say. But when we make a cash transaction, we don't use those books. We write that transaction into the cash book. And apart from the cash transactions or the other transactions which we are writing in those subsidiary books, There may be other transactions also which are written straight away into the journal, which is called the ordinary journal or journal. Thereafter, all the entries which are made either in the subsidiary books or including the journal and the entries which are made in the cash book, they all are posted into the ledger. Because the cash transaction entries are made into the cash book, therefore the cash book is a subsidiary book. Because from this subsidiary book thereafter, the principal book, which is called the ledger, is prepared. But because the cash book itself serves as a cash account and the bank account, which are, as you know, the accounts are part of the ledger, but since the cash account and the bank account role is played directly by the cash book itself, and therefore the balances which are appearing in the cash book in respect of the cash account and the bank account, they are entered into the trial balance directly, and they don't need to go through the ledger route. So when we say we have posted into the ledger, we have just posted into the cash book and the bank account itself, bank book itself. We don't need to transfer the entries from the cash book to a ledger, and straight away we can take them to the trial balance. In that sense, cash book is part of the ledger also. And because cash book in a sense is part of the ledger, and ledger is called the principal book, therefore cash book is also to be treated as the principal book. So we can say that cash book is both. It is a subsidiary book as well as a principal book. Now, the main types of cash book are simple 2-column and 3-column. And in addition to that, because these are the main cash books, in addition to these main cash books, there is a petty cash book also. But this petty cash book is not treated as a principal book. It is purely a subsidiary book, because all the transactions which are entered into the petty cash book have to go into the ledger. So if a question is asked whether a petty cash book it can be treated as a principal book of account, the answer would be no, because the petty cash book is purely a subsidiary book and it does not have the trappings of a principal book at all. Now, let's first understand the first type of main cash book, which is called the simple cash book. Now, simple cash book appears, it looks like an ordinary account with one column on each side for the amount. So of course, like any other account, it has got a left-hand side and a right-hand side. On the left-hand side will be recorded the receipts of cash, and on the right-hand side will be recording the payments of cash. So of course, the particulars and those other columns will be there, but there will be two amount columns, one on the left side for the amounts received in cash, and the other one on the right hand side for the amounts received, for the amounts paid in cash. So the left side records the receipts of cash and the right side records the payments of cash. The cash book is also balanced like any other account. We take the total of the receipts column, and of course we know that the total of the receipts column is always greater than the total of the payments column, because unless and until you have cash, you cannot pay it. So we take the difference of the receipt column and the payments column, And we write this difference on the credit side. When we say credit side, which means on the right hand side, the difference is written on the right hand side as by balance carried down. By, because on the right hand side, whatever entries are made in any account, by word is always added to it as a matter of routine. So after having entered the difference on the credit side, the totals are entered in the two columns opposite one another, and then on the debit side we write the balance as two balance brought forward to show the cash balance in hand in the beginning of the next period, which is the brought forward amount. Now let's see the illustration 1. In a simple cash book, we may have on January 1 we have cash in hand 1,200. So when we say we have cash in hand, it is a balance brought down entry. Then we are receiving certain amounts and we are paying certain amounts in cash. And when we look at the cash book where we are writing all these amounts, we can see that all the receipts are being entered after the balance brought down entry of 1,200, which is mentioned here. All the receipts are mentioned on the left hand side and preceded by the word to. So when we say to RAM account, it means that we are debiting the cash book and we are crediting RAM's account. So for example, January 5 entry, if we see, January 5 entry is received from RAM. So when we are writing a cash book like this, and when we see this entry to RAM account, it should not mean that RAM has not paid for it. Obviously, RAM has paid for it. But by doing this, by writing to RAM account, we mean that we have made a cash payment to RAM. Oh, sorry, we have received a cash payment from RAM. Then we are writing a sales. We have made a sales. So as we can see, we may enter the cash receipt and payment entries, and cash receipt and payment entries could be in respect of sales or purchase, or it could be a trade payment also, it could be a loan also, anything. So when we say to RAM account, means the money which is received from RAM. So credit will go into RAM account and debit has come into the cash book. That is how the journal entry would be there. Debit cash book 300, credit RAM account 300. So for the payments which we are making, they are coming on the right hand side. Rent account 30 rupees, sham account 700, furniture 200. We have purchased furniture for 200, as you can see here. And finally, the difference of the two sides is written as by balance carried down 770. And then this 770 is written on the debit side also as a carried forward entry or a brought forward entry to balance brought down 770 on first of the next month. So as you can see, we are making month-wise entry, and on the first of every month we are carrying forward the balance. So we have seen one thing, that in the simple cash book, we are recording only the cash receipts and the cash payments. We are also seeing here that this cash book is being balanced every month, and the balance is being brought forward to the first of every month. We have also seen that the total of the debit side or the total of the payment receipt side will always be greater than the total of the credit side, because the payment cannot exceed the available cash. We've also seen that a simple cash book is just like an ordinary account. It just looks like an ordinary account, nothing else. Now, a double column cash book. Let's come to a double column cash book. Now, along with the columns for the amount to record the cash receipts and cash payments, if we add another column on each side of the cash book, we can add that column to record the cash discount that has been allowed, or the cash or the discount that has been received. Or we can have a column on the debit side which shows the bank receipts, and another column on the credit side showing the bank payments, or the payments made through the bank. So when we add one more column, then we call it a double column cash book, and if we add two more columns, then we call it a triple column cash book. Now, cash discount is a kind of an allowance that accompanies the cash payments. For example, if you have to understand what is to be written in the cash discount column, let's take an example. Supposing there is a customer and he owes rupees 500, that is, he has to pay rupees 500 to us. We are the business, but we make a promise that we will deduct 2% from his payments if he makes that payment within a certain period. So the customer can clear his account by paying 490 rupees, because 1% is 250 and 2% comes to 1% is 5 rupees and 2% comes to 10 rupees. So he will get a 2% deduction, which means he will get a 10 rupees deduction if he makes the payment within a certain time period. So therefore, instead of 500 rupees, now he can pay just 490 rupees and get over with it. So what we'll write in the cash book is that we have received cash 490, and in the discount column we'll write 10 rupees discount. So cash received will be 490 and 10 rupees will be the discount for the fact that firm is receiving the payment, and therefore for the firm this discount is a loss, and for the person who's making the payment, for him it is a gain, because cash discount will be allowed only when cash is paid and not on any other, not for any other reason. It is very convenient that we should add a column for discount allowed on the receipt side of the cash book, where we are receiving the cash, and it becomes very convenient if we make a column for the discount received on the payment side of the cash book, because when we are making a payment and we are receiving a discount, then the receipt side, which is the debit side, or the and the payment side is the right side of the cash book. So the discount received column would be made on the payment side of the cash book, which is the right side of the cash book, or we can say the credit side of the cash book. So we can say the discount received column is made on the credit side of the cash book, and discount paid column is made on the debit side of the cash book. Because the discount received column is made on the payment side of the cash book, because when we make the payment we receive the discount, and the discount given or discount allowed column would be made on the receipt side of the cash book. Now in the cash column on the debit side, we will write the actual cash which is received always, and the amount of the discount allowed, if any, to the customer will be entered in the discount column. So in the above example, 490 will be the cash received and 10 rupees will be the discount allowed. Similarly, actual cash paid is entered in the cash column on the payment side, and any discount which is received will be written in the discount column on the payment side. Now the bank column on the debit side records the receipts through the bank, and the bank column on the credit side shows the payments through the bank. We should note that the discount columns will not be balanced. They don't require to be balanced, and the discount columns are merely totaled. The total of the discount column on the receipt side will show the total discount which has been allowed to the various customers, and this amount will be debited to the total of this discount column, so to say, will be debited to the discount account, because that is an expenditure or a loss for our business. The total of the column on the payment side shows the total discount which is received. What I mean is the total of the discount column on the payment side will show the total discount received by us, and that will credit to the discount account. So therefore, we are crediting and debiting the discount account with the totals of the discount columns on the debit side and the credit side of the cash book. The cash columns are, of course, balanced, and as we have already seen. And similarly, the bank columns are also balanced, and the balancing figure, the difference between the two sides, is called the bank balance. So if you have a double column cash book, it should have two columns on each side comprising cash and discount transactions, or otherwise cash and bank transactions. Now let us see an illustration of this. Ganesh has commenced his business on 1st of April 2017 with 2000 as capital. Thereafter, he made the following cash transactions in the month of April 2017. So the various cash transactions that are being made by Ganesh are entered here along with the date. For example, on April 1, he purchased furniture and he paid cash for that. On April 2, he purchased some goods and he paid cash for that, because we are writing that he has made the following cash transaction, which means that wherever cash word is not also mentioned, we can take them as cash transactions. So idea is now to make out or prepare a two-column cash book, and we are being asked to make a two-column cash book where we'll be writing a cash column and a discount column, and over there we'll be writing all these transactions that have been made. So you can see here a discount column has been added before the amount column on the debit side on the left side. Similarly, a discount column has also been added on the left of the amount column on the credit side. And thereafter, all the entries are being made here. Whenever there is a sales, we debit the cash book and we credit the sales account for the cash sale. Now here you can see Krishna account, to Krishna account 20 and 600, which means that if we look at received cash from Krishna and company 600 and allowed a discount of 20 rupees. So here we have received a 600 rupees amount. So in the amount column, we always write the actual amount received. If we had received 580, then we would have written 580. We have received 600, which means that total amount of, let's say, 620 was due to have been received, and but 20 rupees is the discount given to discount allowed to Krishna, and therefore out of 620 we have received 600 in cash, and 20 rupees we have allowed a discount. So similarly, all the other entries are also made, and after the entries are made, we can see that discount column is totaled on both the sides. The cash column is balanced on both sides, and the balanced entry is brought down on the first of the next month. Now let us see this entry by petty expenses account on April 7. April 7, we have made some petty expenses payments. Petty means small expenses, trifle expenses, which are not of great importance. So expenses of 15 rupees have been made in cash. Therefore, what we are doing here is that we have a petty expenses account. So we credit the cash book and debit the petty expenses account by rupees 15. I'm sure you are able to understand the other entries, but let us take one more example. We are making a payment for labor. We are getting labor done by somebody, and for that we are making a cash payment of 1000 for labor on April 13. So therefore, when we make a payment for labor, what we do is that we debit the wages account and we are crediting the cash book. When we are crediting the cash book, what we are trying to say is that we are making the payment out of the cash, and when we are debiting the wages account, means that the payment of cash is made for the wages paid to the laborer. So if you have to summarize the double column cash book, we say that the discount columns in the cash book will be totaled here. The discount column will not be balanced, and the total of the discount columns, whether received or paid, will be entered in through the discount account in the ledger. These are the three important points relating to the double column cash book, where a discount column is added along with the cash book. Now, if a bank column is added instead of the discount column, then the bank receipts and the bank payments would be entered just as the cash receipts and cash payments have been entered, and the bank columns would also be balanced, and the balance entered, the balancing figure would also be entered, and it would be carried forward to the beginning of the next month. Now, in case of the bank, it is possible sometimes that even if the balance is not there, still a payment could be made, just as we have the credit facility in the banks. So whatever it is, for the bank column also, we start with the balance brought forward and then from the previous month, and then we go on writing the receipts of the amounts received in the bank on the left side, which is the debit side, and the payments on the right side, which is the credit side, in the respective bank column. Thereafter, the difference would be the balancing figure would be entered in the respective column, and it would be carried forward to the opposite side. Now, whichever person who pays the cash is credited by the cash paid by him as well as the discount allowed to him. So, two credits are given to him, one in the discount allowed and other is the cash paid, wherever any discount is allowed to him. Similarly, the person to whom any payment is made, he is debited with the amount which is paid to him, with the actual amount which is paid to him and the discount amount which is allowed to him. Now we move to the 3-column cash book. Now we know that every company or a firm or every concern keeps most of its funds in the bank. Money can be deposited and withdrawn at will from a bank if it is a current account. So because in the current account you don't get any interest and you can make any large number of transactions also in a day, as opposed to a normal savings account where the number of transactions is limited. So even compared to the cash transactions, sometimes we can say that payments which are made into the bank and out of the bank may be too numerous in number compared with the cash transactions also. So there is hardly any difference between a cash in hand or money at bank, because numerous transactions are done through the bank account and numerous transactions are done through the cash account also. Therefore, it is very convenient that if we have to maintain a bank account in our books of accounts, then we just add a column in the cash book called the bank column to record the cash which is deposited in the bank or the cash which is paid out of the bank. So to record the cash which is deposited in the bank, we make a column on the receipt side of the cash book because the cash is being received in the bank. And whenever payments are made out of the bank, we write them on the payment side of the cash book. So for writing up the 3-column cash book, we can note the points like this, that whenever we are starting a new business, the amount is written in the cash column. If cash is introduced, in case cash is introduced, we write that in the cash column as cash introduced. And if the cash is directly paid into the bank, then we write it directly into the bank column with the description to capital account, because that is a capital introduction into the business. Similarly, if a new cash book is being started for existing business, the opening balances are written there also as to balance brought down. All the receipts which are being received will be written on the receipt side. The cash receipts will be written in the cash column, and all the checks which are received will be written in the bank column. If any discount is allowed to any party which is paying a certain amount in cash, the discount would be entered in the discount column. Even in case of the checks which are received in the bank column, we can write the discounts in the discount column. In the particulars column of the cash book, we write the name of the account or the name of the person in respect of which the payment has been received or made. All the payments which are written on the payment side, all the payments are written on the payment side. cash payment is written in the cash column, and the payment which are made by checks are written in the bank column. If some discount has been received from the party which is receiving the payment from us, then that will be entered in the discount column, even in respect of the payment being made by the bank or from the bank. Another point is an important point called Contra Entries. Often what happens is that cash is withdrawn from the bank and it is brought to the office for use. In such a case, this amount will be written in the bank column on the payment side because it has been paid out of the bank, and the same amount would also be written in the cash column on the receipt side. In the reverse case, where cash is being deposited into the bank, that amount would be recorded in the bank column on the receipt side and in the cash column on the payment side. So in essence, a two-way entry is being made here, or a contra entry is being made here. And in case of such entries, the letter capital C would be written in the ledger folio column in order to indicate that these are the contra entry transactions where cash is either taken from the office and deposited into the bank, or it has been withdrawn from the bank and brought to the office. And once we write this letter C over there, we don't need to further make any posting for these entries. Now we have to note here that if initially, let's say, some checks are received, and when checks are received by us, we are entering them in the cash column and then sending then checks to the bank. In that case, the entry would be as if the cash has been sent to the bank. So there would be a contra entry in that case. So if any checks are received, and when the checks are received, they are entered into the sometimes what happens is that they are entered into the cash column instead of the bank column, and then simultaneously a contra entry is being made for the checks received in the bank or checks sent to the bank for the payments received in the bank on the payment side of the cash book. This point is important that when we receive the checks, we can enter them in form of a contra entry as if cash has been sent to the bank. So while recording the contra entries, we have to understand and follow the basic and important rules like debit the receiver, and credit the giver. And the second rule, debit what comes in and credit what goes out. So, for example, where a cash book with separate columns for bank account is maintained, if a cash is deposited in the bank account, the bank is the receiver of the cash. And since the bank is the receiver of the cash, hence we will debit the bank account, and as cash is going out, we'll credit the cash account. On the other hand, if cash is withdrawn from the bank account, the bank is the giver, and therefore the bank account will be credited as the cash is coming in into the cash account will be debited. Now let us say that if some check which is sent to the bank is dishonored, which means that bank is not able to collect the amount from the other bank of which the check is, it will be, and this dishonored check is received. So what we'll do is that it is entered in the bank column on the credit side. Credit side is the right side, debit side is the left side. On the debit side, we are writing the receipts in the cash book, and on the credit side, we are writing the payments on the cash book, in the cash book. So whenever we receive a check, we are writing it in the bank column on the receipt side. But supposing whenever it so happens that the check which was sent to the bank has been dishonored, in that case, we'll be entering that check in the bank column on the credit side instead of the debit side. To cancel the original debit side entry which was made earlier, and along with that, we'll write the name of the related party also in the particulars column. So in case of a dishonored check, we will enter it on the credit side in the bank column of the cash book. This is an important thing to note. Now, when a check gets received by us from any customer and we send it to the bank straight away, in that case, we have already seen that we make a contra entry. We write that check into the cash column, and then we make a contra entry on the other side for the bank column, as if cash was received by us and it was sent to the bank, or as if cash from the cash box was sent to the bank. Now, if some check is issued by the firm and is not paid on presentation, the check is issued by, let's say, our business, and it is issued to any party. So what we do is that we have issued the check to a party. So we treat it as if the payment has gone out of the bank. So payment side is the right side, the cash book. So we have written that check amount on the right side of the cash book as if we have made the payment to somebody. But when that person makes the presentation of the check into the bank account, there is no balance there, or it is not paid due to stop payment or whatever reason. Then when the check which is issued by us is not paid on the presentation by the other party in his bank, we enter the check in the bank column on the debit side with the name of the party to whom the check was given. Because earlier when we had given the check, we had entered it on the credit side. So by that way, we are able to cancel the check which was issued by the firm because it has not been paid. Now, in a rare case, what happens is that, of course, sometimes it also happens that we receive a check from somebody. When we receive a check from somebody, it is being received in our office. So if a check is received in our office, what we will do? we will enter that check along with the particulars into the cash column. We will not enter into the bank column because it is not so far paid into the bank. And then we send that check to the bank. And when we send that check to the bank, we make a contra entry in the same row on the receipt side of the bank, as if cash has been taken out and sent to the bank. We have treated it as if cash is taken out and it's sent to the bank. Because when we are writing a contra entry for taking out the cash and sending to the bank, how we are writing it? We are writing it by putting an entry of the payment of the cash on the right side or on the credit side, and contra entry on the receipt of the cash in the bank in the same row, and writing a word capital C in the ledger folio. This point has to be understood very clearly. When we receive a check from somebody, what we have done is that we have entered it into the cash column. Why we have entered into cash column? Because it is not yet paid into the bank. So the amount has been received by us, a check has been received, and that check is being received into the cash column on the receipt side, which is the debit side of the cash book. So we make an entry on the cash in the cash column on the debit side of the check which is received by us. Then when we send that check to the bank for depositing into the bank, we have to make a contra entry as if cash is being taken from the office and sent to the bank. So to make that contra entry, we make an entry of the payment of the cash in the cash column. Please remember that earlier we had made an entry for receipt of cash in the cash column by check. Now we have made a payment of the cash on the payment side, and then we make a contra entry for receipt of that cash into the bank column in the bank column on the receipt side, which is the debit side, and write C over there. And if that check gets dishonored, then we enter it in the bank column on the credit side or on the right side with the name of the related party. Because that is a check which was deposited into the bank but got dishonored. But while depositing into the bank, we had entered that check amount in the bank column on the receipt side. And now therefore we have to make a dishonored entry on the credit side into the bank column. Now in a rare case, what happens is that, this is point number 7 here. Supposing a check is received by us and it may be given to some other party, that is, we are endorsing the check to somebody else so that that person can receive the payment of that check. Normally, in case of bearer checks, it may be done. So on receipt, it must have been entered in the bank column on the debit side. A check which was endorsed by us, first thing, it was received by us. So when we had received the check, we had entered it in the bank column on the debit side, on the receipt side. on receipt of the check. So when a check is received and endorsed to somebody, what we are doing in that case is that if we have to endorse a check, we enter it in the bank column on the debit side, and when we endorse it, the same amount will be written in the bank column on the credit side. So ultimately, whatever amount has been received in the bank column on the debit side gets cancelled by the amount written on the bank column on the credit side. And in the particulars column, we'll say we have endorsed this check in the name of another party, and we'll write the name of that party over there. Of course, when we are receiving a check and we don't have any intention to endorse it, then as I've mentioned earlier, that we enter it in the office in the debit side in the cash column, and then we make an entry as if the cash has been sent to the bank in form for contra entry. Now, what are the advantages of having such type of a cash book, where both columns are there, cash column as well as the bank column? The advantages are: A, the cash account and the bank account get prepared simultaneously, and therefore all the double entry is completed in the cash book itself. By way of contra entry, when we take the cash and deposit in the bank, or we take out the cash from the bank and bring it to the office, contra entries are made in form of double entries, or double entries are made in form of contra entries, and therefore double entry is also completed in cash book itself. So by having this kind of a cash book, we are achieving the double entry effect within the cash book itself. And these contra entries can be easily cross-checked also in cash column on one side and the bank column on the other side of the cash book. So since these contra entries can always be checked, the chances of error will be reduced. Another advantage is that the information regarding how much cash is in hand or how much bank balance is there can also be obtained very easily from the same cash book having two columns, one of the cash and one for the bank. And even without preparing the ledger of the bank account, we can easily and quickly get the information about the cash in hand and the balance in the bank. Now, what would happen in case we are having more than one bank account? In that case, we'll have a separate column for every bank account in the cash book. And if you make any transaction between two or more bank accounts, then it becomes very convenient because we can record them and tally them with much less effort. Now, supposing there are two bank accounts, one is a PNB current account and another is the SBI cash credit account. A cash credit account is an account where negative balance can also be maintained. Now, if a check is deposited from the PNB to SBI account, the receiver, which is the SBI account, will be debited, and the giver is the PNB account, and that account will be credited straight away. We have noted one important thing, that discount columns are never balanced and they are just totaled. The cash columns are balanced exactly in the same manner as a simple cash book balancing has been indicated earlier by us. Because in a simple cash book, there is no discount column. There is no bank column also. So just like a simple cash book, the cash column of a double columnar cash book is also balanced. Similarly, the bank column is also balanced. Now, it is possible, however, that bank may allow the firm to withdraw more than the amount deposited or to have an overdraft, so to say. In that case, the total of the bank column on the credit side will become bigger than the total of the bank column on the debit side. So whatever is the difference on the debit side, so the difference will be written in that case on the debit side as to balance carried down whenever the total of the bank column on the credit side is bigger than the one on the debit side. So the difference will be written on the debit side as to balance carried down. And then totals are taken of both sides and written opposite one another. And then the balance is taken forward by writing a by balance brought down entry on the credit side in the beginning of the next month or the next period. However, that is not the usual case. The usual case is there that the payments which are made into the bank will be exceeding the withdrawals. There will be payment into the bank would be more in number or in value than the withdrawals or the payments out of the bank. And in that case, the bank columns are balanced just like the cash columns, because in that case the receipt side would be more than the payment side and debit side would be more than the credit side. So therefore the difference would be entered on the credit side. But if there is an overdraft, then the difference would be entered on the debit side. So now we see an illustration which is called illustration 3, and certain transactions are being given here, and we are being asked to enter the transactions in the cash book, which has a discount column as well as a bank column. So it is a triple columnar cash book, and it is also mentioned here that checks are first treated as cash receipt. There could be two ways of treating the checks. When a check is received by us, we could either treat it as cash receipt in the office, and then we can make a contra entry as if cash has been sent to the bank. Or otherwise, we could treat the checks as having been received in the bank straight away and neglect the entry of their receipt into our office. So both methods can be followed. However, whatever method is followed, it should be a consistent method so that confusion is not created every now and then. That is why it is being mentioned here in the question itself that checks are first treated as cash receipt, which means that whenever check is received, we have to first enter as if that check has been received into the office as cash. And then when the check is sent to the bank, it will be entered in form of a contra entry as if the cash has been taken out from the office and deposited into the bank. Now let us see in this case how the entries are being made here. The first entry, which is made on January 1, is of the transaction Chandrika commences business with cash 20,000. Chandrika has commenced the business. So this is a capital account introduction of cash made by Chandrika of 20,000. So let us see the entry here. We are seeing in the cash book that the cash book has been debited by writing this entry in the cash column, and simultaneously the reference shows that the capital account is being credited by writing the reference as to capital account. So as we have seen, the left side of the cash book is the debit side, and the right side of the cash book is the credit side. Now, let us go to the next entry, which is called Chandrika paid 19,000 into the current account, because obviously when Chandrika paid cash into the office, she has to take that cash and deposit it into the bank account. So 19,000 is deposited into the current account, and we are seeing here that there is entry. There is a entry on January 3 on the credit side, and there is an entry on on January 3 on the debit side also. So on the debit side, the entry shows, on the debit side we are writing the receipts of cash, and we are seeing that cash is being received in the bank of 90,000. On the credit side, payments and payment entries are made, and this entry is made in the cash column. So payment has been made out of the cash in the office. So this is the cash taken out from the office, and this one on the left side is the cash deposited into the bank, and both are the contra entries. So this capital C is mentioned against them. Now let us see. The next entry is he received check. We can assume that Chandrika is a masculine, and he received check from Kirti and Company on account. On account means that Kirti and Company's account is being maintained by Chandrika in their books, and payments keep coming and going based on the transactions, because sometimes purchases may be made, sometimes sale may be made, and payments may be received and paid. So that is a sort of on account relationship where Kirti and Company's account is being maintained by Chandrika. Now check is received from Kirti and Company on account. What we are saying is that when we receive a check, first we treat them as cash receipt. On January 4, 600 rupees is being received. So we are writing it here, 600 rupees. We are receiving it as a check, but we are writing it in the cash column. Please remember this thing very carefully. A check of 600 rupees is received on account from Kirti and Company. We are debiting the cash book by writing the entry in the cash column, not in the bank column. Though it is a check, we are treating it as if we have received cash from Kirti and Company. Thereafter, we are showing an entry here for January 7, 600 here, and January, there was a January 4, 600 here, and then we are seeing another entry of 600 here on January 7. So let us understand this entry. On January 4, he received the check from Kirti and Company. So he has made this entry on the cash column as if he has received cash, and then he pays this into the bank in this check received from Kirti and Company. He pays it to the bank on January 7. So if we look at the January 7 entries of 600, we find that on January 7, 600 rupees shown in the bank column as received in the bank. This is a check received in the bank of 600 rupees, but it is mentioned in the bank column. And here on January 7, we are writing here 600 rupees, which are paid out of the cash. 600 rupees paid out of the cash, and it is a contra entry. On January 7, it is paid out of the cash, which means the check has been taken out from the office. And so cash book is credited by 600 for check taken out from the office, and in this case the bank account is debited and cash account is credited. But when we make a contra entry, what we do is that we debit the cash account. Here we are seeing this thing. By contra entry, we are showing that 600 rupees is received in the bank. So ultimately, it is coming from the cash, and therefore to cash word is written out here. So this 600 rupees is written in the bank column because it is paid into the bank. It is received in the bank account. And this January 7 contra entry is a contra entry of this January 7 entry where 600 rupees is shown to have been paid out of the cash. Now let us go to the next one. It is he pays Ratan Company by check and is allowed discount 20 rupees, 330. He pays 330 rupees to Ratan Company. So we are seeing this entry here that Ratan and Company cash is paid 330 rupees from the bank by check. So this check amount is 330 written in the bank column because the check is paid, and discount which is allowed is 20 rupees. And while allowing the discount, what we are doing is that we are crediting this discount allowed is the discount which is given to us. So this is a discount received. So discount account is credited and the Ratan Company account is debited for rupees 20. Similarly, bank account is credited for 330 and Ratan Company account is debited for rupees 20. Now Tripathi and Company pays into the bank account of Chandrika. So Tripathi and Company has made a payment of 475 rupees into the bank account of Chandrika. So we write this in the bank column as check received into the bank column. Since it is being received directly into the bank and it is not being received by us directly, not by Chandrika directly, so therefore it will not be treated as a cash receipt initially. It will be straight away entered into the bank column, and Tripathi and company account will be credited and cash book is being debited here. So similarly, let us see one more transaction of this 1000 rupees, let's say. So 1000 rupees he pays into the bank, including the checks received on 15th and 20th. So he has received checks of from Varshi and allows him discount 35 rupees on 15th, and then he receives cash 75 rupees and he receives check for 100 also in respect of cash sale. And finally he deposits these checks into the bank, including the checks which are received on 15th and 20th. So on 15th and 20th he has deposited certain checks. So let's say he received a check from Varshi of 450 rupees here, and he also received a check of rupees 100 against cash sale. So about 550 rupees he has received. Then maybe he has received some more checks. So therefore all the checks which are received by him on 25th, 20th and 15th, all together he has paid these checks of 1000 rupees total, including 100 rupees this particular check and this 450 rupees check also. So all these checks he's putting into the bank on 25th, including some other checks which he has received. So total checks which he has received is 1,000 rupees, and he is ultimately putting them all into the bank account. So let us understand this entry. He receives check from Vashi and allows him discount of 35 rupees, 450. So as far as 450 rupees is concerned, we are putting, this is a check received, but although this is a check received, we are putting it in the cash column because all the checks which are received in the office are treated as if they are cash. Later on, when these checks are sent to the bank, the contra entry is made as if the cash is sent to the bank. Now here, a discount is also mentioned here because the check which is received is 450 rupees. Discount has been given of 35 rupees. So discount allowed is 35 rupees, and that is entered in the discount column. So discount account is being debited here by 35 rupees, as Vashi account is being credited by 35 rupees. Similarly, cash account is also being debited by 450 rupees, and Vashi account is being credited by 450 rupees by this entry. Now, on 20th of the month, he receives cash 75 and check 100 for cash sale. So we can see the 20th entry, 100 plus 75, both are entered into the cash column because they are treated as cash, 175 rupees. Sale has been made and the sale account is therefore credited, and the cash account is debited because it is the check received is being treated as a cash. Now, he takes these checks which have been received by him, this 100 rupees check and that 450 rupees check, so 550 rupees check plus another maybe 450 check he has received on 25th. So he takes all those checks and he puts it into the bank account. So when he puts the check into the bank account, we are making a contra entry here by putting the check received into the bank account are entered here as 1,000 rupees, and here the checks which have been taken out are entered here from the cash, and by these checks which are taken out from the cash, the cash book is being credited by 1,000, and the bank account or the cash account is being credited by 1,000, bank account is being debited by that 1,000 rupees. And when we make a contra entry, what we mean to say is that the amount which we had taken out here from the cash, we have deposited that into the bank here, and therefore this amount is shown as if it is deposited into the bank. Now this amount is 1,000 rupees, cash has been taken out. So when we say cash has been taken out, if we are not finding any other checks which are remaining to be deposited, maybe in respect of these checks, he has taken maybe some cash out of the cash book and also deposited. Although it is mentioned here, he pays into the bank. He pays into the bank means he pays cash also into the bank apart from the checks which he has with him. He has checks of 100 rupees here, and he has another check of 450 rupees here. So he has 550 rupees worth of checks here, and he takes 450 rupees more from his cash. So totally 1,000 rupees he deposits in form of the cash as well as the checks into the bank account, so making the total amount to be 1,000. Out of these 1,000, 550 is in form of the two checks which he has received here in respect of cash sale and from Vashi, and rupees 450 he has taken out from the cash box of his cash account, and he has paid that into the bank. So total amount which he has paid into the bank is 1,000 rupees. And therefore the contra entry for taking out the cash from the cash box, this one, and for paying into the bank, and here this one is the entry for making the payment into the bank of that cash plus check of 1000 rupees. Finally, the difference of both sides is taken, and that difference is the balance carried down 300 rupees, and the difference of the bank side is also taken, which is 2745, and these two differences are then brought forward on the first of the next month. So the amounts are totaled. The discount column rupees, and this side the discount is again totaled here 20 rupees, and the totals of the discount columns are entered into the discount account into the ledger, and the balances in the cash account after making the balance carried down entry are the total balances are made equal because of the balancing figures of this 300 rupees and 20,745 rupees, which are carried forward to the next date, which is the first of the next month. So with that, we have completed half of our discussion on cash book, and we'll be continuing with this topic once again in the evening at 9 p.m. So please join us at 9 p.m. for part 2 of cash books.
Sir, one question.